Hello and welcome to Learning Objective 3.2, Post Information from a Journal to a Ledger. So the last learning objective, we learned how to do journal entries. Now we're going to learn to post it, the next step in the accounting cycle. So here is a 4-column account. So a ledger is a group of accounts. So this particular picture of account is for the accounts payable. The account number is 211, which would be from your chart of accounts. You have your date and then the list of transactions. And then you have a post reference that refers to what page the journal entry is on. So if you have to go back to look at it, you can go to General Journal, page 1, or General Journal, page 2. You have your list of debits and credits, which are you post from the journal entry. You go down your general journal and you post these to the appropriate account as a debit or a credit balance. And then this last column, your balance, your debit and your credit, is like a running checkbook balance. So, we had a credit of $5,000, so our ending balance is a credit of $5,000. You take that $5,000 and you add to it this credit of $600. So we have 2 credits. So you would end up having a credit balance of $5,600. Then you add another credit of $250. So your total credit of $5,850. And then you have a debit. So that offsets the credit. And your new balance is $3,350. So it's like, balancing a checkbook, which probably none of you do, as most of us don't anymore. But that's exactly what it is if you have any point of reference to that. Okay, posting is So posting involves the transfer of information from the journal to the ledger. Step 1, in the debit account in the ledger, record the date. May 1st, whatever year it is, and the amount of the entry. Step 2, record the page number of the journal. So General Journal, page 1, in the post reference column of the debit account. Step 3, calculate the new balance of the account. And step 4, record the account number of the debit account in the post reference column of the journal. This listing is known as cross-referencing, and you do these posting reference columns so that you can go back and track where you got the journal entry. And it's a bigger procedure if you have multiple pages and hundreds of journal entries, just so you can go back if your debits and credits don't balance. You know exactly where to go and where your source of original entry is. Okay, so how to post from a journal to a ledger. So remember, a general journal would be just one page with all your journal entries on it. And then your ledger is your group of accounts. So we have an account here, cash. We have our ledger for the cash account, and we have our ledger for the capital account. So you take this journal entry and you start with cash. You move the date on the cash account. You say it comes from General Journal, page 1, and you post the debit here, and then you tally across what your ending balance would be. And then you do the same thing for the capital account down below. You post the second one of the entry, which was on May 1st. It comes from General Journal, page 1. And then that is the credit. So this $10,000 credit go here, and then you bring your balance across. So that is how you post it. So you have to do that for every single journal entry. Okay, so here is a picture of your complete list of all your journal entries. As you update, okay, I'm going to go back to one slide, sorry. So on this back slide, the one part I forgot is, after you post this cash entry, this account number here, you put that back in your post reference column so that you can say, okay, I posted this to account 111, which is my cash account. And the same thing for your capital account. Your account number is 311. So your post reference here is 311. So you have this post reference column going back to which account number it went to. And this post reference column goes back to the page you got the journal entry in. So it was General Journal, page 1. Okay, so you have to complete that. So this next page is a complete list of all your journal entries with the post reference column all filled out, because now everything has been posted to our individual ledger accounts. Okay, so that is how that would look. Next, we have our general journal. This is just showing you a close-up view of it with the post reference numbers in here. Here are a partial general ledger. So this is the cash account and the accounts receivable account. And you can see everything's been posted because this post reference column has been completed, and our balances in the account. Okay, so we have like our ending balance of the cash account is $6,155. Accounts receivable account, the ending balance is $5,000 as of the end of May. Okay, so the next couple pages just kind of shows you all your different individual accounts. I can't even see what that says, but this first account here is computer supplies, prepaid rent, computer equipment, accounts payable, capital, withdrawals, and graphic design fees. So there's all the list of all your accounts. and then some additional expenses here that have all been, now that those journal entries have now been posted to the ledger. So posting to the ledger is another step in your accounting cycle. Okay, and the last thing I want to go over is cross-referencing. The posting reference column tells us which transactions have or have not been posted. In the ledger, the posting reference leads us back to the original transaction, and users can use the post reference columns to find the journal and the transactions. So I think, here's just your formal definition of cross-referencing, which is, filling out those post reference columns in both the ledger and the general journal. I think I've explained that throughout. And that concludes posting to the ledger, the next step in that accounting cycle.